Hi guys. Today we will analyze one of the most expensive stocks, NVR stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock's overall performance in the market is below average. The short-term trend is neutral, while the long-term trend is still unclear. It is advised to wait a little bit longer to see how this turns out. Strong support levels are around $4,180 and $4,000. Next strong support levels are around $3,500 and $3,120. Strong resistance levels are around $4,390 and $4,550. Next strong resistance levels are around $5,000 and $5,310. In the last month the stock has been trading between $4,175 and $4,508 range, which is wide. It is currently trading near the lows of this range. The stock has an average volume of 15,000 traded shares per day. This is low and it might be dangerous to invest in illiquid stocks. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 9% per year, for last 5 years. We see that the average profit margin of the stock has been around 11% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 97% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for NVR company: bad, average, and good. First scenario. NVR will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 3%. Future profit margin would be low, 11%. Future free cash flow to net income rate would be low, 85%. In this case, the fair value of the stock today would be $3,251. Second scenario. NVR will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 4.5%. Future profit margin would be average, 12%. Future free cash flow to net income rate would be average, 90%. In this case, the fair value of the stock today would be $3,872. Third scenario. NVR will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 6%. Future profit margin would be high, 13%. Future free cash flow to net income rate would be high, 95%. In this case, the fair value of the stock today would be $4,589. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 415.7. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For NVR, analysts forecast growth rate around 7% per year in next 5 years, and future P/E around 9. Again, I will use 3 different scenarios for NVR company: bad, average, and good. First scenario. NVR will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 3%. Future PE would be low, 9. In this case, the fair value of the stock today would be $2,070. Second scenario. NVR will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 4.5%. Future PE would be average, 11. In this case, the fair value of the stock today would be $2,882. Third scenario. NVR will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 6%. Future PE would be high, 13. In this case, the fair value of the stock today would be $3,872. As you can see, today the stock is overvalued, $4,200, even if we expect the company's high performance in future. While the company has a great profitability rating, there are some minor concerns on its financial health. Also, the stock is expected to show a small growth in revenue in the next 5 years, 5 to 7% yearly. Keep in mind that the stock's long-term trend is still unclear. Be very careful, the stock can go lower. Based on that, I wouldn't touch the stock at current levels. Also, it's not a very liquid stock. Generally speaking, there is no need to invest in low-volume stocks. Most investors are better off with ETFs and large listed companies. I may still consider buying the stock. If the stock drops below $3,500, I just need a huge margin of safety with this stock. Company's strengths. NVR is an American company engaged in home construction. It also operates a mortgage banking and title services business. The company is the fourth largest home construction company in the U.S., based on the number of homes closed. NVR is a high-quality company with a unique business model. Its unique business model has allowed it to consistently earn high returns on capital, as well as consistently grow revenue, earnings and free cash flow over the years. The company employs an asset-light business model that allows the company to grow without dramatically inflating invested capital. As a result, the company's return on invested capital is larger than its 4 biggest rivals, and continues to improve. The company typically does not engage in land development. It acquires finished land lots that are ready for building, which the company believes mitigates risk. Insiders own 10%, and the company is consistently buying back stock. NVR has announced a stock repurchase program to buy back $500 million of its outstanding common stock recently. The U.S. has a shortage of homes, which it cannot make up for within the next 5 to 6 years, given supply chain constraints. The company's return on assets of 29%, return on equity of 51% and profit margin of 15% are amongst the best returns of the industry. Risks. Housing market is tricky, and it has elevated risks. Higher interest rates will put a dent in home sales and home prices. Demand for new homes has materially fallen recently as higher rates, negative consumer sentiment, and inflation hurt new unit orders ahead. NVR shares fell after the home builder's second quarter of 2022 results, driven by a year-to-year slump in new orders, as well as a higher cancellation rate. Home building industry is cyclical in nature, and tied to the health of the economy at large. Tough competition. Home builders are competing for land, materials, labor and customers. NVR has a fairly high concentration in the Washington, D.C. and Baltimore markets. A disproportionate decline in housing demand in these markets relative to the rest of the U.S. would have a negative impact on the company's business. It's a not very liquid stock. Stocks with low liquidity may be difficult to sell. Even if you are sitting on unrealized gains on these stocks, it may not be possible to take the full profits, due to large bid and ask spreads. Be careful. Based on estimates for the next 5 years, the company will show a small growth in revenue. The revenue will grow by 5 to 7% on average per year. The earnings per share is expected to grow by 2 to 4% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.